Hello, everybody. Welcome to the Prospero.ai stock market live streams. Excuse me. The markets are mixed as we open up here today, and everything is pretty close to the flat line. Not a ton of volatility here, but the Dow, the SPY, and the Russell are in the red. The QQQ is slightly green right now. We have a lot of headlines to discuss on the stream today. We're also going to be covering the core weave signals in Prospero that we have just absolutely crushed. And if you get the newsletters, you probably saw us talking about it last night in our weekly newsletter that goes out. Everybody hit that like button as you're entering the stream. If you're watching this live or the run back in the future on YouTube or Twitter, it really helps us out. I want to take a look at the net option sentiment for SPY and QQQ as we get on into the stream here today so we could check back in later. All right, so I have the QQQ right here. It is currently at 41 and the SPY is at 0. So we are seeing that divergence in the signals come back into the Prospero app. We were looking a little bit more bullishly for a few weeks there where the SPY was never quite above that 40 level that we look for the bull bear line, but it was a lot closer to the QQQ. And now we're seeing a bit of a reversion there. So something to pay attention to. We have the CPI coming out tomorrow morning, which is sure to make a market moving in one way or the other. Right now, a rate cut is being priced in for September, but depending on the CPI, how can that change? We will talk about all those details. I see Ori saying hi in the YouTube chat. Hello, Ori. Hopefully you are enjoying the streams. I see you've been coming back week after week, so love to see you in the chat. Then, like I said, we're going to talk about CoreWeave briefly. The Prospero signals were bearish on the CoreWeave IPO right near the highs, all the way down to that 100 level that we talked about on stream, and then our signals flipped bullish, and now we're seeing CoreWeave up today. So nailed, just absolutely nailed the stock. I see D Curtin. It's been a while since I've been able to join the live. Which Discord channel is appropriate to request a ticker? All right, let me hop into the Discord right now for you, D. Curtin, and I will steer you in the right direction. So, I believe it's one of the ones below. Maybe it's the suggestion box. Yes. So if you go in our Discord for Prospero, it's right below the general chat. It's the suggestion box. You could throw the ticker in there. And George was talking about how we got a new system, so it could probably be in the Prospero app a little bit quicker than it used to be in the past. We're also going to be covering on the stream today NVIDIA and AMD. There was an update coming out about how some of their chips in China are going to be basically taxed 15% of the revenue and handed over to the U.S. government. And it was, I think, a little bit of a surprising thing that was announced today in that regard. So let's see how NVIDIA and AMD are doing today. Maybe that could be affecting them slightly. Doesn't look like it. Both are up, and NVIDIA is up very slightly, AMD up 2.5%. So doesn't look to be too concerning for the stocks, but we'll get into those details in just a bit. Also, we have to talk about the concentration of the markets. Is it a concern, the fact that so few companies control the direction of the market these days? The Magnificent Seven stocks are just absolute behemoths. So is this a concern? And if it is a concern, how is it going to be resolved in the next 5 to 10 years? And we're actually going to cover a similar conversation to that effect for Bitcoin in the crypto space. So that's going to be later in the stream. Two stocks I wanted to bring up because they were making massive moves post earnings. Let's check in on both of them, are TTD, the trade desk, and C3.ai. Both were down 30+% post earnings. Trade desk is up 3% today after making that massive downswing. And C3.ai is down 23% today. But coming back from the lows of the day, they were down over 32% this morning. So are either of those stocks interesting now that they've dropped so much? I feel like it's tough to find stocks that are at a discount or a bargain with the market continually rising. And building off that conversation, I wanted to bring up the SaaS industry, which was a market darling for so long. There were so many SaaS companies that, since they had high margins, high growth rates, everybody wanted to be investing in these companies. And I feel like the pendulum is swinging with AI kind of disrupting that whole space. And Adobe is probably one of the best examples of that. So we'll talk about SaaS and the future of SaaS business. Hey, George, welcome to the stream.
Hello.
A few more topics to go through, actually just two. So we're going to cover Paramount acquiring the rights to UFC, and they're making a massive investment. So they better hope they are right. And it's a 7-year commitment. So we'll give you all of the details later on when we cover that. And we saw ESPN kind of aligning with NFL, Paramount now aligning with UFC. Maybe these companies don't have enough cash to kind of cover the entire sports industry, so they're having to choose and pick a certain organization to align with. And then last but not least, we are going to be covering an area of the market that has been beaten down for years and years and years, getting a little bit of life breathed back into it this morning. A lot of the stocks are popping. Trump, a headline came out that he's considering reclassifying marijuana as a less dangerous drug. And we've been covering this ongoing thing that's happening in the markets where, when a sector has the administration's blessing or support, it's really boosting the stocks and the shares. So with such a beaten down industry, and then also maybe a better, in a better position with the administration, is that a powerful combination for some big returns? So we'll get into all of that later on. Mario said, morning, gentlemen and viewers. Hello, everybody. Thank you for your comment, Mario. As we are about to start here, everybody hit that like button, subscribe, and follow us on X if you enjoy the streams. We are going to get started right now. So, George, we have after a little bit of a lack of data the past couple of days, we have a big one set to come out tomorrow. CPI will be released. And I checked this morning, there's about an 85% chance right now for a Fed rate cut in September of 25 basis points. How concerned, or do you think it's going to be a bull bear reaction from CPI? And then also, do you think this one CPI report has the potential to shift that 85% to either maybe even a 50 basis point cut or no cut at all? Do you think this one report can swing what the market's thinking that much?
I'm not thinking there's much chance of a 50 basis point cut. I do think that there was, I think one of the things that sent the market down when Powell last spoke is concerns about, inflation and concerns about how tariffs, might still be impacting that. So yeah, I absolutely think that that the number matters. Now, I think if it's at expectations or lower, I think we're going to get a cut. I think at this point, especially with the jobs market, showing some difficult data, I think that's almost certain. I think it becomes a little more complicated if it misses above. I do think the jobs data might have us get a cut this time, regardless. But I think there might be too many, especially subsequent cuts. You might actually see the probabilities go up for this time and down for other times, depending on the reading. That is, I think, kind of the way that I'm looking at it. That some people might be predicting more rate cuts that are actually coming. But it'll be interesting. But I definitely think, at or below expectations, I think that, I think the market should react, pretty positively.
Well, I see in our live chat here that Dr. Carter, Matt, has reposted the stream. So thank you, Matt.
That's is that a new thing?
That. I don't know if he commented that.
That must be a new feature.
Telling us now, yeah. I wanted to also bring up CoreWeave again today because the shares are up about 7.5% now. And as you were saying last week, could be the best case study for Prospero signals ever. And it's just continuing in that direction today. But now we have to ask you the reverse of what I asked you on the bear side. When is it time to take profits on the bull sides? What levels are you looking at?
I think with earnings, it's tough. I'm going to have to, it's nice that it's gone up so much because I feel like with earnings, I could maybe just be back to neutral on the position at worst. versus just like a huge gain. I mean, any good news, people are going to go crazy. And I kind of feel like they're growing so much. The earnings are going to be good. But I think, we're probably talking about the same level. Like I think 160, we start to get worried. I have a hard time seeing it go over, 180, 200. I think 200 is kind of like a top I would see for it. But in terms of where I would definitely sell, like get rid of it, irrespective of the signals, obviously I'm going to be watching that option sentiment go down. I think, 180 is probably where I'd say, no matter what, I think I'm taking profits here. I'm not sure I'm not sure how much I could get past, the all-time highs. But yeah, talking about that case study for a second, I mean, until I dug into the numbers, and if you haven't read our letter this week, you should go for it, because it's crazy how good the signals were on the this CoreWeave thing and how much they helped us. When we got into like our last, continuous short position that we got out of, 8.5, we wrote it from, I believe 7.7 to 8.5. We got in at 159.40. And from that point, the high of the stock was 163. I think 163.60, something like that. So, and then we also have the video where we called it, we said 100 was going to be the bottom, and $100.80 was the bottom. So yeah, hard to get more exactly right than that. But yeah, it's definitely our best case study. We really nailed it. The signals helped us. You can see in the letter, like upside when we first got in was about below 20. By the time we got out, was above 80. And that's what we always kind of say are like the bull bear levels with upside. So that made it really, really obvious for us. I mean, the extreme bull and bear level. So yeah, this was a really, really good case study in that we like had the right feel for it. Our signals helped us have the right feel for it. But also gave us, some excellent direction.
Now I have a question around understanding the signals better, because I feel like typically net option sentiment is like the signal we look to, like above all, like it's kind of the number one. But in this CoreWeave case specifically, it was the upside and downside trends and how those levels changed. So, and like net option sentiment is still kind of low overall in CoreWeave. Do you think that's something we can take for like all of the Prospero signals, all the stocks? Like if you see a trend like that, that outweighs everything in, the upside and downside shifting? Or is this a case specific? How do you feel about that?
I mean, 15 to 86 in about a month, which is what I saw, is a pretty incredible switch, right? That will weigh a lot. But also it's like what we say, like it really matters where a number is. CoreWeave was fixed at 0 net option sentiment, right? It was there. And it's the same thing with SPY. If SPY net option sentiment is at 0 for a long time, and then all of a sudden it's at 29, which is what I saw CoreWeave, it was 0 for a while. Then I saw it hit 11, and I got in when I saw it hit 29, because it's like, that was a lot. That's a big, big increase. Even though it's not a great number, it's a big increase, especially when you pair that with the big change in upside, right? That's what had me pull the trigger. And we were right about that, obviously.
I asked that partly because like Lululemon signals, that upside and the downside are kind of looking similar, although they're not as like on that scale of change. They're both like, upside is going up, downside is going down. So I was wondering about that. So maybe if you want to peek at that and see if you find it interesting.
Oh yeah. Yeah, this could be something. We add Net Socials up there. I could add Lululemon. I'll keep an eye on it. What's it doing today?
Charlie B on YouTube is asking about UNH. Is a reversal coming?
So this is where we are in like all healthcare stocks right now. I mean, UNH is a great value, right? In every typical sense, I would say, it's making a strong case to get in there. I think with the headlines, like very tough headlines from the Trump administration on healthcare, right? Then you have the fact that there's this, this case going on around, the CEO getting shot, the practices around that. I mean, there's a case right now saying that the management is responsible for the CEO getting shot and the stock decline because of their, pretty unscrupulous practices. And I don't necessarily think that's a bad suit. Yeah, maybe Gilbert. But yeah, I think in UNH, you're talking about both of those risks, and both of those headline risks are a little too much for me. Even though the setup, everything says it's there, I still can't, my risk control practices can't wrap my head around that. And that's similar to Eli Lilly. A lot of the signals do look good for it, but because of, the headline risk situation, I can't get on board with them right now.
So spinning to NVIDIA and AMD, a story came out today about how the NVIDIA H20 chip and the AMD MI308 chip are going to be subject to a 15% revenue tax handed over to the US government. And I think it took the market by a little bit of surprise when this was announced, but it doesn't seem to be affecting the shares in either too much. They were both up today when we checked in the beginning of the stream, and it is still that way as of now. Is this concerning to you at all, or does it change your opinion on them? And I also saw there's a little bit of within China right now, there's a little bit of resistance to adopting NVIDIA. They're saying concerns of kind of the same thing how we feel about the China products, like backdoors and all of this type of stuff. Do any of those narratives concern you for these companies that have run a lot recently?
First, I'm actually just a little confused about what we saw today, right? Because AMD especially, it was one of the stocks that was down more than anything pre-market. So I'm a little confused by that movement to see it up now. Because it's actually just that reaction. I don't really see it as a problem because this was revenue that they were not going to get a month ago, right? So, or a month or two ago. So 85% of something that you weren't going to get before is a lot better than 0% of that. So I actually don't really have I don't have a problem with that headline. But I'm just confused with the stock movement, why people would kind of beat it up a little bit and then have it swing around. Maybe, it's always a thing that I'm talking about. Institutions are always trying to get better prices on things. So if they see an opportunity to short something before they buy the dip themselves, they can do it. But yeah, I think this story, the thing we keep hearing about 100% semiconductor tax, that's a little scary. Especially because we don't know really how that's applied, who it applies to, anything not built in America, that applies to a lot of stuff, right? And that's pretty far reaching because there's a lot of chip stuff that isn't built in America. And it's possible it might be, the other thing that we have to know is when it's going to come into effect, right? Because I actually think it would be smart to say, oh, it's going to happen in maybe not 5 years, 2 years, let's say, while he's still president. And you give people time to get factories, get things spun up before it goes into place. I think that's going to have way less of an impact on the consumer, right? Because if it happens soon, no matter how much is spun up quickly, we're still going to be having tons of stuff imported. Pretty much anything to do with compute, whether it be, cloud services, any personal computing you're going to buy, all that's going to go up if that tariff goes into force anytime soon. So that's a risk on everyone in the market. But the China sales, taking some of it, it's quite untraditional. Especially if you think of it in the aggregate, it's okay, we consider it to be a national security risk to send these chips. But we're going to send them anyway and just take 15% on it. To me, that doesn't seem like a good trade-off. But the flip side is you can say that, if you're concerned that they're being bought through other countries anyway, which is a big concern that they get sent somewhere, India, and then India sells them to China. I think it makes a lot more sense from that perspective, where you can say okay, they're going to get them anyway. At least the U.S. government can, fund our own, maybe it goes right to the cybersecurity fund from that tax. I wish things were that efficient, but it's probably not going to be that way. But yeah, that's the bigger concern for me. The the potential 100% on semiconductors, I don't think I'm really concerned about this tax.
So Jonathan is asking about a stock in the chat, BMNR. It's been up 100% in the past 5 days, but net option sentiment in Prospero is still above 90. And this is a stock I've been seeing mentioned a lot on socials. So maybe a bit of a momentum play right now.
Oh, I've heard of this before. BNMR? BNMR. BMNR, Biomarin. Oh, damn, there's two. That's crazy.
BMNR. It's called
Yeah.
Bitmain Immersion Technologies.
Yeah. We have two of them of the same thing. I guess I just added this. It only has a 97, like, wow, that's interesting. It only has a few metrics, and it's 97 upside, 93 net option sentiment. Yeah, that looks very interesting. BMNR.
What does that mean if it only has a few metrics? Is it like such a small
It means
company?
someone asked me to add it, and I did. And it probably did, like, it's going to take a little while. It's probably, it's going to take a little while to populate everything else. But I will look into that. I mean, yeah, was it 161 back in 703? I'll have to look into this more. I'll have to look more into the situation with it. But it definitely looks interesting.
Well, thanks to bringing
using immersion technology for mining. Yeah, it definitely looks interesting.
A lot of questions in the chat today. Thank you, everybody. We got another one. Do you plan on providing an API for Prospero.ai to access the signals programmatically from beyond Trench?
From beyond. Oh, I was like, I thought that was part of the question at the end. I was like, I don't know what it means from beyond Trench. No, unfortunately. And that's just because they wouldn't be as much value to you. Like, we couldn't stop, say, a hedge fund from subscribing to our API and grabbing them and just like front running everything that we're giving to retail first. So unfortunately, we can't offer that. We'd like to, but to make sure they continue to work for everybody, and obviously they've worked for years and they continue to. I think that, that's what we have to do. I'd love to be able to give them to people, but we'd have no way to validate and make sure we were keeping out, people that basically wanted to use it, front run the trades, and dilute the signals. Let me look at app. I hadn't looked at it today. What am I in for? Oh, damn. When did that change? This week. So a lot of the times what that means when you see that is we have cutoffs. We have cutoffs for what's determined to be like a long-term option and a short-term option. So a lot of times when you see that behavior, it's because there's probably a big chunk of options that fell off or no longer considered long-term options or considered short-term options now, or, maybe some people sold them or whatever. But yeah, I will probably look to sell app at the first sign of trouble. Now that I've noticed that, like, it is a functional thing, but it's also not necessarily a good sign when people aren't rebuying other contracts, even if other ones, kind of fall off or like graduate into short term or what have you.
So Saucepot was asking about the cannabis momentum, and that's actually one of our topics we had, so we can jump right into that. The thing that is moving them is there is a headline that came out that Trump is reconsidering reclassifying the marijuana as a less dangerous drug. And my question with this was, this is a sector that's been beaten down so much, and I believe people's thought process before this came out was that Trump was pretty negative on there. So maybe the thought process of the market is not switching from like neutral to bullish. It's actually switching from bearish to bullish, which would be a big change. And we've seen the administration's blessing move industries. So a lot of these stocks are up. How are you feeling? Do you think this could be a big winner if this comes true and really helps out those companies?
Yeah, I mean, the way that I really look at that is I feel like the expansion of the weed industry has like already taken a huge effect. So like I don't know how much growth is in it. Like it's the kind of thing that, if you got wind of this and can play it before, by all means, and it might, ride a little longer. But the tough thing is when you're just playing a political event, it's hard to know how to properly value that and how the market's going to value that. And you don't really have control over that momentum when it ends, right? That's why we like to do things that, kind of make more sense to us.
We got another question back for App. D. Kurt's asking, as far as App is concerned, what made you hold it after the post-earnings crash? Crash might be an excessive word there. Was it the Prospero signals that didn't change much, even though the price dropped significantly?
Yeah, I mean, there were two things. Like, I didn't think I thought earnings were good, and like that's always something that like even if there's a negative price reaction, but if I read the earnings report and I'm just like I think it's good, that's always reassuring. And yeah, it was kind of an easy call because I read the earnings report. I'm like, I think this is a good earnings report. And then the signal stayed good. So yeah, it was kind of an easy decision based on that. I kind of wish that I added another position when it was like down 10%, because like at that point I was like, I really don't like, it's got to go up from here. Like maybe it'll be down like, 3% tomorrow, but yeah, I didn't think so. And yeah, that would have been smarter, but just holding is still good.
So I want to bring up two stocks that are making post-earnings crash, definitely. C3.ai and the Trade Desk, both down 30+% after their earnings. Are either of these stocks good buy the dip candidates for you? I feel like it's tough to find some like, stocks that are well off their all-time highs in this bullish market. So now that they've made some big downward moves, maybe priced in some of, the downsides of their businesses, do you think either of them can be an attractive entry here?
Let's see. I mean, I think I like C3 better than the Trade Desk came up like in the momentum score for bear recently. Oh, but it's recovered a bit. Yeah, I thought my answer was going to be different. This is why it's always good to check the Prospero signals. Trade Desk does look way better than C3. I mean, I think like just from a value perspective, I like C3 better because I think they're in the right position and they may have underperformed, but I think they're just in a good market position. But the Trade Desk looks better in the signals. I mean, either one could be a good, value, but that's not really what we do. Like if the signals looked better, and we could catch it on the way up a little bit, kind of like what we did with Duolingo, which we're already out of, and it looks like that was a smart decision, where the signals look good. Like maybe it was near kind of its bottom. It looked like it was going to be a nice recover, but the signals look really good. Then we'll do that. But neither of the signals look good enough here. It seems like too much risk because either of them could easily have another leg down. I think where the signals are for Trade Desk, that's less likely. But I still want it to look healthier.
A stock that did not move down post earnings was SoundHound, which is actually up 15% again today after they had a big earnings move the other day. I just wanted to mention that since we kind of have covered them over the months and years. But I have a question about C3.ai. Like they're not a brand new company in the markets. They're almost 5 years since their IPO now, down 82% since. That has to be a massive indictment like on the company when the AI boom is currently like underway and this company can never find a floor, find their footing, and take a part in that like AI boom. So I don't know, like when 5 years down 82%, it's got to mean their tech is not all it's cracked up to be, right?
Yeah, I think they didn't do a good job of like finding a niche, right? Even Big Bear, I was flying this weekend. I saw Big Bear AI like on like the screens. I guess that's like where I guess we're being like looked at on with these pictures from Big Bear AI, because you see them on these little screens. And I think, when you look at Palantir, like what they did really well was they kind of specialized in consulting, right? Consulting, we talk about like the idea of external joins, making it really easy to combine data sets, right? They had a really good entry. And I was in AI as a service for 8 years, so I know this well. You really need to make it easy to get the yes, right? I think what C3 was kind of doing, they were coming in just being like, well, we could do whatever. And I actually know some of the projects that they had because I knew someone that was an early employee there. And it was just kind of like they were pitching like the we can do whatever thing, right? And I think if you don't specialize a little bit at the beginning, it's a little too easy to get lost. And I think you're vulnerable more and more to, this open source stuff, right? Like I think the idea that like your AI specialists or anything like that really makes it harder to convert, especially when like, okay, maybe you don't need to hire a C3 AI. Maybe you could just hire a head of AI. You pay them a very similar amount that you pay C3, and then you own the technology, right? Because a head of AI can, pull a lot of weight these days.
Well, you used a term in there also that now it's interesting, AI as a service. I had a question for you today. Software as a service, it was once, I feel like, the darling of the investing world. Like everybody wanted to be investing in these companies. They had great margins, great growth. And I'm wondering if AI is kind of, replacing that, and maybe instead of like killing these companies, they'll just morph from software as a service to AI as a service, like you said. But I think a great example of this change or like lack of excitement now in software as a service, SaaS, is like Adobe stock, which has just done nothing for years and years and years. And they have all these AI competitors now. Do you think we've seen the peak of SaaS companies? And would it be smart for those companies to rebrand as AI as a service now?
Yeah, I mean, the thing about it is, Adobe is really vulnerable to like generative AI, right? Because a lot of times it was like, oh, great, you could edit this and that. Now you can like have a short conversation with an AI and do a lot of the similar work for Adobe. And you don't, there's a free version of it. Their whole thing is paid. But like, yes, I think the biggest issue in software as a service isn't necessarily, I think there's still good software. I think it's just hard to invest in something that you don't know the obsolescence of. A good software as a service business used to have a nice moat, but like now you can really look at any software as a service business and say, I don't know, with how fast AI is advancing, how much longer does this piece of software have? And it's hard to say. Like before you could be like, no, I don't think there's going to be any real competitors. They got a moat, this and that. Now it's just like, even if you don't see any real competitors to a software as a service business, you don't know how long it's going to be until an AI can come along and completely undercut their whole company. Because it's like this article I wrote for Fast Company where I said AI isn't coming for your job, it's coming for your company. And that's just the thing that these software as a service business, they all have all these employees, they have this, that like they have huge capital bases that they need to support their businesses. So yeah, you don't really like, someone could build a similar quality thing and undercut them on price. They don't have to pay for all the like infrastructure and employees and everything like that. And that's a huge threat to every business. And that's going to cut into how things are priced for sure.
I'm wondering, like, I don't think this is around today, but 5 to 10 years from now, like someone like me who has no technical ability to create one of these things, like if I went to an AI and I was just like, give me, check out Adobe's business, give me like an app that's exactly the same. Like 10 years from now, I feel like AI could create that. Do you think something like that's going to be illegal? Like if I spawn up a new software in AI, but I just like direct it to copy a company basically, but you change all the branding, the logos, blah, blah. Like how could you prove that you copied it? And like, yeah, how do you think
I guess you haven't been following Lovable. Like Lovable, I think just had like an $80 million Series A. That's essentially what Lovable's doing. I mean, maybe not the copying thing, but you could easily tell it to copy something. Lovable's just helping you build, websites, apps like from scratch that are just like the people that made it said, we're making this so people that have no coding ability can build things. So that's already here, and that Lovable is growing crazy fast, and it's really easy to use.
But like, so what about the question of that? Like, do you think companies that are on the opposite end of that, the Adobes, the Salesforces, all of these companies, do you think they're going to like fight back, or like what is their how can they live in that world of the AI world of the future?
I don't think they can.
Interesting.
Okay. Like we've already seen things on the legal side say like content, like these AIs can use like content and things like. I don't think you ever really own a business like it's very hard to say you own a business, especially software. There's lots of legal standing that basically says precedents. It's like software is very like, even if you have trademarks or patents or whatever on software, it's very, very hard to defend.
This made me just think of a thought-provoking topic. I feel like what will a moat be 10 years from now? Like, will any digital or software or any digital company have any moat, or like will moats only be for companies that are like in the physical world, like railroads, industrial, like all this type of stuff? So like, if this technology is improving so quickly and can just replicate anything, how can a moat survive in the digital space?
I think the main moat is trust. That's what I think we're at, and that's very much how we think about building Prospero for this age. Right? Because at the end of the day, we know that there's going to be a lot of things coming with like all these numbers, and there's going to be an inundation of like new AI signals, things that can invest. But at the end of the day, we're building something different. We're taking a hands-on approach with people. We're teaching people things. So at the end of the day, if someone comes and says, look, oh, I have this new AI signal, like blah, 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 it's just like, well, how long have you used it? Right? Is a good question. Like, are there people teaching you? Does it make you better? Like, is it meant to replace you? How do you really know that it works? And we'll have, people that have been following us for years being like, well, I know this one, I trust it already. And that's everything. In an age where there's just going to be anyone can create anything in a second, right? Relationships, trust. That's the only thing that's going to matter.
Really interesting stuff. And it sounds like, the trust and like basically just like a strong user base is kind of like one and the same. Like, it makes me think of like, someone could probably create another Instagram, but if it doesn't have 1 billion people on it, like why would everybody switch from one to the other? So something like that.
Well, that's a different thing. And I also think that's powerful. That's switching costs. Switching costs are like immense. But I think if you had a small platform, the people that you trusted said was better, like you could get around, you could be like, okay, they'll build a user base, blah, blah, blah. Let's give this a try. Right? That's what happened with like Snapchat and TikTok. It's like, maybe people have multiple ones, but people try new platforms. But that trust is the important thing.
So I wanted to ask you about the level of market concentration we're seeing in the Magnificent Seven on the markets today. I think I came across a graph over the weekend where it's only been this level of concentration in this few companies a few times in the market's history. Is this a concerning thing to you? And if it is, how do you see it being resolved over the coming years, decades, for these stocks that are just so in control of like the market movements?
No, I mean, I'm not surprised at all. Karl Marx said this was going to happen, I don't know, hundreds of years ago. Like a concentration of the means of production. That's late stage capitalism, right? The big get bigger. And like this was another Fast Company article that I wrote, which is just like when you start having the largest companies grow at speeds that used to be reserved for smaller companies, and we're seeing that in NVIDIA especially, right? What's your incentive to take the risk on a smaller growth company when these like big ones are growing just as fast as the small ones in many circumstances? I mean, that's the crazy thing that we're seeing right now. And then when you have AI accelerate, right? That's just another thing where it's just like quote unquote owning the means of production gets that much more valuable when you're sitting on technology that's just way more valuable because of the amount that it's built and how much more advanced it is than anything else, right? You can just start creating things that other people can't create, and that just like accelerates that. And that's what you're actually seeing in the stocks, right? You're seeing people betting with the knowledge that the position and the technology and the advantages that these companies have make them worth that much more, value them at that much higher of a multiple. And those advantages aren't going to decrease. They're only going to increase. Could other companies replace these? Sure. But the ones that do are probably going to be better technology, even leaner from, an employee, from a, pension, from all these kind of capital constraint perspectives. Like that's what's going to replace it. And they're going to be even harder to beat at that point. So yeah, I think I think that it does create risk in the market when you have that much concentration, but this is also just the way it's going to be going forward, and it's going to get more extreme.
So I was kind of asking about like if it was going to revert the other way, but since you don't really think it's going to do that, like what is the outcome from your perspective? Like are these companies going to control like 60, 70, 80% of the market one day, or like are they going to have to be broken up, or like what is the outcome like 10, 20 years from now the way you're thinking about it?
I think in previous versions of this capitalism, like they might be broken up, right? I mean, we did see a lot of trust busting. It's possible that people just get fed up about the like kleptocracy enough that these things are broken up, but we're not seeing any evidence that people want to break them up. But it is anti-competitive, that's for sure, and we're supposed to have laws that protect people from that. But we're also not seeing any real inkling to break them up. So I don't think it's going to happen. But if you're talking about having a competitive, landscape, anti-monopoly, that kind of thing. I mean, I think we're seeing the perfect example with Amazon right now. What came out in the Wall Street Journal, right, where they've started raising prices, and I think beyond what other people are doing, and a lot of people didn't have knowledge about that, because the way Amazon sells itself as not a monopoly is that it's just got the best prices, right? But if it doesn't have the best prices and it just pushed everyone out and then is raising the prices, that is literally monopolistic behavior. Like that is the book on monopolistic behavior. So if that exists and they're not being broken up as a monopoly, then we clearly aren't enforcing monopolies anymore, because that is just like, that is the classic textbook example of what a monopoly does, right? And they absolutely have pushed a lot of other people out of business and are now raising prices. So there doesn't seem to be any inclination, and certainly not singling out any political parties here. It's definitely the Democrats and the Republicans that don't seem to have any interest in enforcing this stuff. And yeah, just the question becomes, is it ever going to be enforced? I'm not sure.
I feel like the question also is like, at what point do those 7 companies have more control over the future of America than the political parties? Like they're so big, so dominant. It's like, you can't have one of them just like, falling apart. It's going to really affect like, America's future, or at least, in the several years, if like one of those stocks drops 50%, it would like, really derail things, kind of the momentum.
Yeah. I mean, we definitely saw that with the banks too big to fail, and they're bigger now, but no, I absolutely believe it. And there's a historical context to what we're talking about there too, right? There was like in the Gilded Age, like JP Morgan, the Rockefellers, the Vanderbilts, they were more powerful than the government, right? And we might be headed that way again. I mean, you could argue that, when Google said they weren't going to do the robotics contract for the government anymore, because whatever, it's the one that Palantir, you could argue that Google had better technology than the government. The government was interested in their technology. Google had better, and it was uninterested in sharing it. You could argue that that is a sign that Google, in some senses, was more powerful than the government.
Mm-hmm. I love these conversations that are kind of like a little sidestep from the stock specific coverage, but we have a lot of people here. So I want to ask our audience, like, do you like when we spin away from like, the exact, up and down movements of stocks and kind of talk about AI, business world, political stuff a little bit more? I'm just curious. I also see a question from Kyle James in the chat. Thoughts on Zeta's stock? ZETA is the ticker.
I've got a question. I got a question for you or anyone. Kyle asked it. Yeah. What's the deal with Zeta? I hear a lot of people talking about it, and I don't like, it's got a good management team. There's some things, but I don't see it. Like, I don't see why the number of people talking about it do not seem doesn't really seem to validate all of the, like, I look at it and it's a promising, it's a promising company. I see it in Prospero, 42 probability I don't love, an option sentiment is a little, but there's just nothing special. This is the best way to say it. I don't see anything special about the stock, but a lot of people talk about it as special. Like at this point, I'd rather core weave. Like it's down a bit today. Like I see when people talk a lot about a stock like Zeta, what I see is people trying to strain themselves to find like the next thing so hard that they're taking risk, right? Like I would much rather own, even CoreWeave right now because it's really turned around the signals than Zeta. I mean, CoreWeave now has like what upside breakout? Like pretty high. 83. But yeah, that's my answer. I mean, it's a fine investment. It's like good in the signals, good, not great. But yeah, I just think sometimes people want to find the next thing so badly and they'll psych each other up about it. And that's fine. You could get a very nice return on that. But sometimes a lot of retail people psyching each other up on something is just that. And there's going to be more risk than people are talking about. There's going to be more downside than people are talking about. But yeah, I think that it's a promising company, but there's better investments out there. I'd take any of the longs I'd have in my portfolio right now over it. And then if I wanted to go smaller cap, I would much rather something like TSSI or QBTS as a risk based asset than something like Zeta. And I think, the last thing I want to talk about it, I think you do want to be a little careful when there's like a big retail fervor around something that doesn't quite match up in the signals. Like TSSI, I believe, is like maybe 1/10 of the market cap of this company and looks just as good, if not better, in the signals. So I think there's a lot of, it looks about the same actually right now. Higher upside, about the same net option sentiment. So yeah, I'm a little weary of it.
I think similarly, and like what you've mentioned on the stream before of like, you've got it in my head now of like how institutions kind of know the playbook and are on these social media sites. And I always wonder when I see one of these stocks that I've never heard of popping up everywhere, I'm like, well, is that real or is that just institutions kind of talking about it because they know like they can drive momentum in it? So I think that's something that everybody needs to think about.
Yeah, I think that's a good point. I think there's a lot of people trying to make Zeta happen. I think there's a lot of institutions out there that are they have big bets on it, and they're probably trying to drum up retail interest because there's definitely a nice business there, but there's not the kind of exciting business that merits the way it's talked about online.
And I see we got a lot of responses. People are liking the discussion today. So thank you guys for answering, and I'm happy you're enjoying it. Another company I want to bring up, actually 2 stocks are involved in this story. So Paramount and UFC, which trades under the ticker TKO. They agreed to a 7-year deal where the UFC events will be streamed on the Paramount Plus app. UFC is going to be paid $7.7 billion for that 7-year contract, which is a big step up. They were making about $500 million per year from ESPN. And we've now seen ESPN align with the NFL and now the UFC aligning with Paramount. It looks like these streaming players don't have the budgets to like kind of have access to all of the sports. So they're kind of having to align with one. Do you see that also? And then do you think this benefits the UFC or Paramount more than, one or the other, or just mutually beneficial? How do you feel about that?
I think UFC to me is the big winner here because I think you're really limited when you're pay-per-view. I think that if you're gonna really blow up, if you're gonna really because I know how the live sports goes. There's a lot of people that are just like cruising to look for something, and when they have live things on, they're just like at the top, it's there. I'm sure that method you're going to find a lot more new watchers than when you're pay-per-view and you're basically just like, you might make more dollars in the short term, but you're not building the same following in the long term. And people used to love boxing, right? I think people like watching fights. They like, I think this is going to be a really positive thing for it. I personally hate it. I think it's too much brutality. Like, I thought boxing was too much for me, and that's like another level. I never watched ESPN. I was watching ESPN and I saw someone like get like power bombed into getting knocked out like yesterday. And I'm just like, Jesus, the world is terrible enough for me. I don't need to watch that kind of brutality. But yeah, like, it's definitely going to be good for them. It's definitely going to help their following. And, Paramount's in the streaming wars. We talk about it. Like, it's very hard to get those eyeballs, get those subscriptions in the streaming wars. I think it's going to be good. I think it's going to be absolutely good for them. I think there's probably a lot of people that don't have Paramount Plus that will get it to watch this. Like, I think the type of people that watch UFC are not necessarily the type of people that watch Paramount things. So I think it's a very smart move for them to get people on the platform that way, because like, you'll basically have people that are there just to watch it.
Well, it's funny, as you were talking all the time, I was like, wow, you're describing me, because I like the UFC, but I'll never pay for the pay-per-views. Like, I do the whole, trying to find it online. But instantly when I saw the story, I was like, oh, that's exciting. Maybe I'll just get Paramount. Like, it's so much easier. And I think that's music to Paramount's ears. Probably people like me I would never, ever, ever think about getting it before. Now it's actually like, maybe I will get it. So we'll see how much that is able to shift their users. I think the UFC has a lot. And the thing about the UFC is they're so worldwide, since their athletes are from everywhere. So it'll be interesting to see what happens there. All right, we have one more story to cover on the stream today. I hope you guys have all been enjoying it. Like it up if you have. We've had over 1,700 people tuning in so far. We're going to talk about Bitcoin a little bit, and it's kind of similar to the Mag 7 concentration that we talked about. I came across a stat. It was called Bitcoin dominance, and it was talking about the share that they have of the entire crypto market, and it's currently about 60%. And I think that's around the highs of where it's been at in recent years. I want to check out Bitcoin, see how it's doing today. I think it made a new all-time high over the weekend. A little bit off of that, it's about 120,000. Do you think Bitcoin will maintain that level of dominance in the crypto markets in the coming years, decades? And if so, like, what could Bitcoin's market cap be if that's the case, if the overall crypto market expands? Right now, Bitcoin is about a 2.4 trillion market cap.
I mean, when you say it like that, I actually am a bit concerned. Just because that is a huge percentage of the market when, it's not a utility token, right? There's a lot of these things that are coming out that have actual utility. So that actually scares me. I mean, the other side is it's just the thing that everybody knows. It's the easiest to invest in. So there's kind of two sides to that argument. I just think 60%, is a lot when you think about things, right? It's almost like it's like kind of the same as being like, oh, like if 60% of the dollars were in the S&P 500. I mean, that's an interesting thing. What percentage of dollars are in the S&P 500? Let's ask our ChatGPT friend that, because I think that's an apt comparison. I think this will give us a good benchmark. Oh, all right. Yeah, I guess when you look at it like that. But that's just so much. No, I don't think that's a good comparison, because you're talking about a bunch of companies and Bitcoin is just one company.
What was the answer you got?
I mean, I saw it. It's like 80%, but I'm just like, no, that doesn't make sense because it's so many different companies. It's not the right comparison. I mean, it's more. There really isn't a good comparison because you can't say like Nvidia and that's just one company and Bitcoin's more than that. Bitcoin's like the bellwether for it too. So it's hard to get a good comparison, a good benchmark. But I still think, given the fact that cryptocurrency is going to grow that much. But it's hard, right? It could, as that market grows, it could be 40% and still have a huge, hockey stick upswing too. We don't really know exactly how many dollars are going to go into that. But yeah, I mean, I think you got to be bullish on it right now, regardless.
My one response to your statement of like it doesn't have utility. I feel like Bitcoin kind of does have a utility, and it's maybe the only crypto that its utility can't be challenged, which is like the hedge against the government's printing money, inflation, racking on debt. And I don't think another crypto would be able to challenge Bitcoin's, place in that spot. Whereas a lot of other cryptos, I think all of their utilities could just be made with another crypto. So what do you think of like that aspect of it?
No, I mean, utility has an actual definition in that, and in terms of like, you can use Ethereum protocols to, run transactions, for example. But there's more to it than just the actual currency. But like, no, I don't know if I agree with that because, Ethereum, Solana, they all have the same hedge. Like cryptocurrencies are the hedge, right? It's not necessarily Bitcoin specifically. That's just the most popular one to hedge against inflation or whatever you say. Although we are not necessarily seeing it as a hedge against the market as it's been promised. We are seeing it perform very similarly to risk assets. But no, I mean, I think I'm very I think it's easy to be very bullish on it, but that's always my biggest risk when I talk about Bitcoin specifically, that I think cryptocurrencies, I'm very bullish on them, but I don't actually even know enough to know the probability that Bitcoin is like the long-term winner, right? Because we're still in the pretty early innings of cryptocurrency. And, no matter how dominant something is in the early innings, like sometimes it keeps going, sometimes it loses it. And there's a lot of examples of both. And I don't really even know how to odds make the probability that Bitcoin stays dominant. That's a really difficult thing to do.
A good discussion for sure. And we are seeing the markets. Most were red when we started the stream, but now the QQ SPY and Russell are in the green. The Dow is the only one in the red. It's about time to do the switch over where we'll do the model portfolio update. So I think we can do that now. And it was a fun discussion today. So I hope everybody enjoyed it.
Be right back.
All right, everybody stick around with me. George will be right back, like he said, in the Prospero.ai laboratory. And we'll do the live switches to the model portfolio. Jonathan said AOL was very dominant in the beginning. LOL, I think referring to Bitcoin, probably, yeah. I want to check also while we're doing the switch over the net option sentiment in Prospero for the QQQ and the SPY. Mario said, good meeting. Thank you, Mario. I'm glad you enjoyed it. Okay, so let me pull up in the Prospero app, QQQ and SPY. Alrighty. QQQ is at 46 and SPY is still at 0 now, so no change in the SPY. Let's see how long it's been flatlined now. The SPY, it did pop up actually to 1 on August 8th, so last Friday, but since about August 1st, so the entire month of August, it's been pinned basically at 0. So when will that matter is the question, I guess. Or will it recover to the QQQ, or will QQQ go down to the SPY? Let's take a look at the short-term bull list as well in the Prospero app, which is when you open the app, for if we have any new Prospero users in here, it's the first thing that pops up. Right now, we are seeing Meta, Alibaba, Eli Lilly, Lululemon, UNH, ASML, NVIDIA, Google, Apple, and Intel all on the list. We typically only look at the short-term bull, but let's look at the short-term bear as well. ARCC, Ares Capital, Booz Allen Hamilton, Hannon Armstrong, HB Fuller, Extra Space Storage, Interesting. XLE, Spider Select Sector. Ooh, energy is on the short term. That's interesting, being an ETF on there. Steel Dynamics, Cord Energy, Landbridge Company, and Eastern Bank shares. So you'll see a lot of the bearish companies in the signals are a lot lesser known, smaller cap than the short-term bull list. Interesting to see the energy. I'm going to ask George about that when he gets back in here. The Spider Select Energy Fund being on there, which has a 13 net option sentiment, 54 downside right now. I wonder if that energy has mostly to do with like if it's like all inclusive or if it's like mostly gas and oil. If there's like nuclear exposure in there at all. It's down on the year, still negative 2%. All right. If anybody's new, what we're about to do is George is going to tune back in and he's going to make the live changes to the Prospero model portfolio, which is usually, paid for in our newsletters, but you get to see it for free. So that's the benefits of sticking around till the end of the stream. Let's see how you guys did on the like button for YouTube today. A few weeks ago, we crossed the 20 mark for the first time ever, which was cool to see. Today, we are at, drum roll, 16. All right. And I didn't even really ask you guys. So that's great. It's popping up to 17 now. So good to see. Just 3 away from that 20 mark. Maybe, just maybe, we could get back there today. We will see by the end of the stream. Maybe if you guys like the ads and drops that George make, you'll like it up. Let me take a look now across the markets and see if there's any big movers. Actually, George is back in here now. So
yeah, AOL is a good example.
Begin. Tesla's up today, George, and kind of breaking out of a range here. So maybe on Wednesday we'll have to bring Tesla back up if this move continues.
Yeah, interesting. Where is it in that option sentiment?
Let me take a peek at the old Tesla. So Tesla is at 68 in net option sentiment. Still low.
Yeah, not enough yet.
One thing I was surprised to see, we checked at the short-term bull list while you were gone, and XLE, the Spider Energy ETF, was there, which I was a little surprised to see like an ETF there. Is that surprising to you or no?
Especially an energy ETF. Yeah, definitely. That says something. What's it doing today?
Let me take a look. Its net option sentiment was at 13. It is down 0.2% right now.
Oh, it's in the bears.
Yeah.
Okay, that makes way more sense. I was like in the bulls. That's insane. All right, let me. No, I gotta share my screen.
Oh boy, we had 100% increase in the SPY. It's at 1 in net option sentiment now.
Oh wow, that's technically an infinity increase.
Yeah, yeah.
All right, so 1, and where is QQQ?
QQQ is at 45. D. Curtin said, good info on the XLE. Just rolled out of my Oxy covered calls.
Ooh, we're approaching 30% above the market again. Look, I guess we're really hitting it well.
I would imagine it's getting harder to see changes in this portfolio now that it's like this one, it never resets, right? So like,
yeah,
the swings in the performance will be slower.
Definitely. All right. Oops. Okay.
Let me just shout out our YouTube audience. In between when you're switching over, I highlighted that 20 like mark, which I enjoy hitting on the streams, and they helped us get there. We're at 21 now, so shout out to everybody that hit that like button. Growth is having a good run today, which has been the steady state of the market. We are now seeing large cap growth as a dominant force at very time level. Obviously, a validation of our strategy to always steer towards large cap growth.
Oh, we already have 2 bros, so. Oh, look, Lulu's up there. Maybe I'll consider this a little more strongly. All right, what am I doing? We're also going to make a screener today here because I'm due for it, and I was like, oh, might as well do it live so everybody can see. I did it on like a stock market news live a few weeks ago, and I think people enjoyed it. Is our MIDD and CHPT, are those wins or losses?
CHPT is a loss. What's the other one? MIDD.
Yeah.
Not seeing it.
MIDD?
Yeah.
There should be 2.
Let me see.
Here, we're going to add UNH to our trading portfolio, but everyone knows that's different than our investing portfolio. It's not validation. It doesn't invalidate anything I said. It just looks like a good time to take that risk in a larger portfolio. There's a few interesting ones here. One, two, three, four, five, six, seven, I can add one more up here. It's a good recovery for ASML. Do we already have a sound hound? I think we do. Oh no. Okay. All right. I feel good about this. Now I definitely want to add MongoDB. All right, done with that. And then we still got other things to do. We have to definitely want to add Mongo. I think it's Mongo. I want to look at both of them. What was the other one? It's Mongo or I mean, Twilio looks really bad too. I think I like the setup on Mongo better. I'm adding Mongo. But it might be at the bottom. I'm not going to add it right now. I'll check it out. See how the market's doing maybe towards the end of the day. Okay. What was I doing? Oh, I'm doing this so people can watch. And normally what I do on this is I'm going to see if I can see any. I mean, it looks like growth is pretty good again today, but I think we did growth. What's the current screener? Value. Huh. So we'll go back to growth. I actually want to do 70. Damn, Palantir's down to 56. All right, so now everyone can see what we're doing. Now before everybody gets an alert. Now we just have to make sure it appears in the app. It's there. Wow. Reddit is an interesting one to consider. Doing well today. All right. Any other questions?
Any other questions? I think we have to stay live until we hit 2,000 total viewers. We're 11 away. Come on, everybody. 10 away now. Nicole said, "Thank you, George and Stephen. You are very welcome." That's gonna do it though.
One. I mean, we can wait. We have one more question. 93. I mean, we're really.
Oh, it's going up now.
I think we'll get there. I mean, it's ticking up.
So the stream on Wednesday is TBD between Wednesday and Thursday, right?
Well, I do for the people that are here, like, yeah, I actually got to finalize that. That's a good reminder. We might as well show people, for anyone that didn't read the letter and is not going to read it, like, just how good we did on this core weave thing. Like, there's 3 things right here. 1,000 on our 6 position so far, and that's going to be higher today because CoreWeave is up a lot. This was before today. 1100% annualized beat of SPY. We were $4 from the top and $1 from the bottom on our latest thing. And it was only 2 days apart from when we flipped from short to long. So yeah, like this is definitely the best we've ever done, but not surprising given some of our other performance. And we went over that. I will add, I'm going to write that down myself, JMIA, but it's always good to come on our Discord. That's the easiest way because this might disappear. I'm going to make a point of doing this, but it might get lost. But yeah, just make sure. I'll do my best, but the best way is on Discord.
The Discord is also linked in our description, so Car, if you want, you can head over right now pretty easily. But yeah, we crossed the 2,000 mark. Fun stream today. We will be back live later this week. Have a great investing week, everybody. Thank you for tuning in today. Thank you, George. I think this was one of our best streams ever, so let's keep it going next time we're live.
Thank you.
Bye, everybody.